We have major breaking news coming out of the XRP ecosystem. XRPFI is here. Axelar and Midas have partnered and just announced that they are launching MXRP. This is going to be the first yield-bearing liquid-staked XRP token, bridging into the EVM. This could bring quite literally millions of XRP holders directly into decentralized finance and unlock a new era in cross-chain liquidity. Before we dive in, I want to give a huge thank you to Genfinity's ecosystem partners, Hedera, Hashpack, XTC Foundation, Constellation, Algorand Foundation, and more. These partnerships make conversations like the one we're having today between Axelar and Midas about the XRP ecosystem possible. We're joined today by Georgios and from Axelar and Dennis from Midas. And I want to remind everybody that this conversation is for educational and informational purposes only. Nothing here is financial advice. Georgios and Dennis, how are you guys doing today? And congratulations on the announcement.
Thank you very much. And super excited to be on the show.
Thanks for having us, Ryan.
100%. So I'm going to kick off here. I think low-hanging fruit question. What is XRPFI? What is MXRP? And maybe I go with Georgios here to maybe start us off and intro yourself too, but can you explain how Axelar's interoperability makes something like MXRP possible across ecosystems and maybe give us an overview? And I'm sure, Dennis, you're going to want to hop in on this one also.
Perfect. So on the personal side, nice to meet everyone. I'm co-founder of Axelar. Before Axelar, I met my co-founder at MIT. We're part of the founding team of the Algorand blockchain, where we designed and built one of the first proof-of-stake consensus protocols in the space. And more recently with Axelar, we built the most decentralized interoperability platform in the space with 81 chains connected. And as of last month, XRPL and XRPL EVM, Axelar is the only interoperability platform launching on XRPL. And we've been talking for a long time about bringing XRPFI and DeFi to the XRPL. Now the time is right because we have three pieces. We have interoperability with Axelar. We have smart contracts with the XRPL EVM, which was again made possible by Axelar. And then the third big component is Midas, which is the leading vault provider in the space. And I'll let Dennis talk about it in a moment. But effectively, if you look at every other DeFi ecosystem, and particularly the Ethereum ecosystem, there is an asset class that kickstarted DeFi adoption, and that is liquid stake tokens. People want to be able to earn yield on their assets and then take a tokenized representation of the asset and use that productively in other applications. Right? This is a $50 billion market on the Ethereum side, and we're looking to create something similar for XRP, targeting 10 billion in AUM by the middle of next year. Powered by Axelar and Midas, and I'll pass it to Dennis to introduce himself and tell us more about the technology underlying this.
Awesome.
Yeah, thank you very much.
Yeah, Dennis, go for it, please.
Excellent. I have a more boring traditional background. I used to work at Goldman Sachs and capital groups in traditional finance. So I came into this industry with an angle really around tokenization. We started out tokenizing T-bills, then we added a product that gave users exposure to the basis trade, and really we've iterated over these and provided strategies to provide exposures to more crypto native strategies, including vaults such as MXRP. So here we effectively provide tokenization infrastructure. Our core focus from the beginning has to be to really make sure that we have composability at its first and foremost. I think tokenization without this element provides no utility, and this is sort of the differentiation that we have brought to the table from the early innings. We've grown to over $1 billion in TVL with a team of 12 people, but no incentive, no marketing, no token dilution, all on organic product market fit, and exactly like products that we're doing here with MXRP. So what this token really is really something like a liquid staking token, similar in its nature. So it's a token that you can use in DeFi. It's transferable, it's fully composable, but it provides the exposure to strategies that aim to generate yield denominated in an XRP. So this is effectively becoming a perpetual buyer of XRP. When you think about it, that's really the value proposition to the ecosystem. In Ethereum, for instance, as we discussed, you have many solutions like EVFI, you have Lido. These are very large projects and one of the core pillars of the DeFi ecosystem, and they allow users that hold ETH to stake it and to enhance the return profile, either more passively, like just having as in the treasury in the solution, but even in a more in a context that allows them to get much more exposure on this. So the users in a DeFi context, for example, borrow and lend against an Aave. This is exactly the vision we have here today. So if a user wants to earn and accumulate a holding in XRP, they can use it in a passive fashion, but they can also engage much more actively with the development of money markets and really building the core infrastructure on XRP EVM.
I think it's huge. I think Georgios. So I was doing. I mean, for some context, I was doing a video yesterday, and I think one of the most interesting things about this technology is the ability for kind of normal individuals over time, and obviously with an underlying layer of compliance that has to be there, but normal individuals being able to kind of participate in different financial things that are, you know, quite frankly, like reserved for just like the ultra wealthy 1% of 1% of population across the globe. And I think this is pretty exciting to me that, you know, different strategies and things like that. I guess one question I have for Georgios here is, can you maybe talk to like the XRP community from an education standpoint, like maybe just inform them a little bit of what this actually means for them to be able to earn yield on their XRP and to be able to potentially participate in some of these different aspects that's, you know, quite frankly, weren't on the XRPL before. And also are, like I said, kind of in the traditional world, just reserved for this, the 1% of 1% of kind of the populace.
Yeah, this was very well said, Ryan. And this is exactly what we're doing here. Democratizing access to trading strategies that you wouldn't be able to access without being a sophisticated actor, right? Even myself personally, I'm pretty well versed in DeFi, but I don't typically deploy my funds directly. My biggest DeFi position is actually some of the Midas products that you see on their website. So I think even for more sophisticated people, unless you want to sit in front of your computer every day, rebalance your positions, and go after the highest yielding, risk-adjusted opportunities, it makes sense to deposit to a protocol like that. So simply put, for the XRP holders, the goal, and of course, this is not a commitment, but this is really like what we expect based on where the market is and where the market is heading, is that users will be able to earn 10% APY on their XRP, and those will be the best risk-adjusted returns on the market. When you deposit capital into MXRP, the XRP, through a compliant structure, is going to be deployed to centralized exchanges through one of the biggest custodians in the space. And an asset manager will get a loan of USDC against the XRP. So just to talk about numbers, once this gets 10 billion in AUM, the asset manager will get a loan of 5 billion USD against the XRP, and will deploy this 5 billion into delta neutral strategies across all of DeFi. Delta neutral means that you shouldn't lose any funds unless the underlying protocols break, and typically those are blue chip DeFi protocols like Aave, Morpho, Ethena, etc. And the beautiful thing about this is that once you hit those levels, like 10 billion AUM, you have $5 billion that you trade through delta neutral strategies across ecosystems. At 7%, this will generate 700 million of yield from external sources that will go back and buy XRP and be annual buy pressure, as Dennis mentioned, perpetually for the XRP ecosystem. Right? So this product is also very healthy for the price of XRP because it will aggregate yield sources from everywhere, use it to buy more XRP, and deliver it to the community.
I want to ask briefly, because there's just so many directions that I could take this kind of discussion. And I'll ask maybe Dennis, because through Midas's platform, obviously, there's a lot of different kind of liquid staking aspects across multiple different ecosystems. And you guys obviously have the experience coming from traditional finance, you know, an entity like Goldman Sachs. I guess the main question that I have is, you probably learned how to tackle maybe user experience to an extent over time. You know, is there an education gap from native blockchain and distributed ledger users to learn how to be able to leverage their assets? Or, you know, kind of what are you looking forward to from an educational standpoint for people that are wanting to kind of leverage their XRP and participate in MXRP?
Yeah, no, I mean, this is a huge challenge, of course, and a very interesting topic that you bring up. So, from our perspective, and in my journey from a professional investor background, we really focus on the task of tokenizing. So we make the availability of the product. We have a regulatory framework. We look very carefully about disclosing the risks, not understanding the returns, not understanding the risks, not make forward-looking statements. We obsess about this topic, but at the same time, we make it in such a fashion that users could then decide on their own accord to make decisions with the assets that they may mint. So from our perspective, we deeply care about user education. So we care that users are aware of risk, we are aware of the profiles. But often it's actually that in this ecosystem, you have a lot of users that trade at fairly large fashion. So oftentimes the user groups that participate in these, I would say, more active leverage trading strategies, they do it in larger volumes. So the professional fund managers, they trade, let's say, a couple of millions at any point in time. That's also a reflection of possibly of the gas fees that you actually have in Ethereum mainnet, where transaction often can cost you between up to $20. So it really doesn't make sense to trade larger volumes that are below a certain amount, let's say $100,000. So really, from our perspective, we focus on making the user experience as seamless as possible, but at the same time, be transparent about the risk, be transparent about the communication, and then allow these users to decide, okay, on their own accord to engage in more transitions. So many of our products are available on on-chain money markets, so you can decide to borrow and lend against it, but it's not our necessarily recommendation. It's really sort of the user's own discretion to make the decision.
Sure. No, 100%. And I kind of will follow up here with Georgios. And I think, when my wheels start spinning a little bit with the amount of ecosystems and blockchain networks that Axelar has integrated, paired with kind of the Midas aspect, this is maybe more of a question for Georgios. Like, it seems like, and again, this is certainly not financial advice from my stance. I'm just thinking about what could be possible. And obviously you have to measure risk and everything else. It seems like there's actually, I know there's always a ton of opportunities across all of crypto. And it's always very hard to keep track of all of those opportunities. And it's almost like it ties in a lot of this stuff with like kind of the automation aspect that I would expect to happen over time. And Georgios, what does it look like from, I mean, I know you probably can't speak on behalf of like the managers of some of these funds and things like that, but there's just so many opportunities. I mean, chasing kind of yield across these networks seems like just a huge amount of low-hanging fruit to be able to like have your XRP work for you through something like MXRP. Is that kind of the correct assumption here?
Yeah, Dennis, you want to take this?
No, yeah, exactly. I can take that exactly. So in the back end of the collateral, so asset managers are extremely well placed to make day-to-day decisions on optimizing the return, optimizing the risk profile, and like you've said, there are many LP opportunities which they may engage in that then enhance the return of this. So it's exactly like this. I think the average users would find it very difficult to engage in this, but professional asset manager does this for a living, and this is exactly how we structured it here.
So I guess my follow-up question is, I mean, if you guys can get into maybe some of the ins and outs, and I'm sure everybody's going to want to know from the XRP community, all communities. So I guess first and foremost, like jurisdictions, where will this be accessible kind of at rollout? Obviously, you can't promise future jurisdictions. It's going to be, I'm sure, depend on compliance and all sorts of stuff. But where will kind of initial onboarding be accessible, and what's that kind of rollout kind of look like a little bit?
Yeah, I can take the question. So good question. So the issuance is out of European jurisdiction or from our European approved base perspectives. Now we restrict access, unfortunately, in some jurisdictions such as the United States, US persons, and the UK, sanctioned countries, and some other restricted regions. So this is certainly a restriction point. We also have on-chain sanction screens that prohibit certain users from engaging. But from that perspective, that's some of the restrictions we have from the compliance levels.
Awesome. And I think follow up to this is, can you maybe walk us through the mechanics of, I guess I'll kind of get, this is maybe, I don't think it's a boring question, but it's kind of a boring question. Like the user experience to onboard, that process from if a user wants to participate in this and signs up and meets all the criteria and everything, taking XRP and then essentially trading it or staking it or whatever it is to gain MXRP. Just maybe walk us through that. Like, what options is a user going to have? What's that user flow and journey kind of look like in the simplest terms?
Well, that's a very important question and goes back to what you talked about earlier about user experience, right? So on the high level, there's going to be two flows. The first one that's going to go live will require users to bridge their funds to XRPL EVM, because this is where the smart contracts are deployed. So the user will have to use their Zaman wallet on XRPL. If they don't have an XRPL wallet, they will have to first withdraw from a centralized exchange to the XRPL. Then through Squid, which is the bridge interface, you will have to bridge over from the XRPL to the XRPL EVM. The process will take a couple of minutes. As a user, you will have to install an EVM wallet, and through that wallet, you will be able to mint and get your MXRP that has inherently yield earning opportunities as a user. As you understand, this is a complex flow for a lot of XRP holders because most of them don't use DeFi and don't have an EVM wallet. We are looking at various different front ends that we're working on, through which a user will be able to replicate the centralized exchange user experience. So as a user, you will be able to go to a front end, open an account with your email. You will still have to withdraw if you have your funds on your centralized exchange. Otherwise, you can just use your Zaman wallet. And then through Axelar's cross-chain message passing capabilities, you will be able to one-click open the position from XRPL on XRPL EVM, right? So day one, there's going to be a more complex flow, and users will have to familiarize themselves with the EVM and install a wallet there. But a couple of weeks later, we are working on a user experience that will be one click and won't require the users to install any wallet. Just log in with your email. If you have your funds on a centralized exchange, withdraw to this new platform, and then one click, open a position and start earning yield on your XRP.
I think that's awesome. And I think, I remember back in, I don't know when, it's like late 2019, maybe 2020, whenever I saw like the Polygon and some of the other scaling solutions for Ethereum come out. And I'm like, when I first saw it, I'm like, nobody's going to use this. And I looked like a year later, I'm like, oh, I was like so wrong, like in that regard. But, one thing that you mentioned that's really interesting, I think, is, the goal for assets under management. And I forget what time frame you said that in, but I think you said $10 billion assets under management in a kind of a short window. That's pretty huge. I mean, so I guess, what are some of the expectations that you guys have for how many users are going to take their kind of their XRP and start leveraging it for yield and some of the other things that we've been talking about?
That's a great question. And Ryan, you touched on an interesting point. When all those other platforms were launching in the Ethereum ecosystem, like Polygon, these are very complicated products, right? And you could expect that, they would take time to get adoption, but incentives drive the world, and those platforms provide interesting opportunities. Some of these liquid stake tokens were some of the early opportunities, and the opportunity to earn yield got people onto those platforms, and then they built network effects. So we're trying to replicate something similar for the XRPL here, get more of the existing users on the blockchain, get new users from other ecosystems back to the XRPL ecosystem, and create yield opportunities not just for XRP, but also for other assets in the ecosystem, like RWAs or RLUSD. Because one way to think about the yield rate of MXRP is going to be as the benchmark interest rate of the ecosystem, right? So think about interest rates in traditional finance. When they're high, all other rates are going to be lifted up. We're going to see a similar effect here, where because the benchmark rate is going to be very high, it's going to lift all rates across the ecosystem and benefit all the protocols, but also bring new builders and users to the ecosystem. So at the end of the day, we're all human. We're all incentivized by, incentives, opportunities to make money. So this is perfect for kickstarting adoption to the XRPL ecosystem. And on the $10 billion number, I mean, my personal target is 9 months, so middle of 2026. This is only 5% of the XRP supply, and it's actually much smaller than the size of the market on the Ethereum ecosystem, right? So this is perfectly attainable. Our job here is just to accelerate adoption, not just for this asset, but if MXRP hits this 10 billion AUM, we're going to see a massive growth of DeFi on the XRPL, high yields for RWAs, high yields for RLUSD, and this is going to benefit everyone, right? So this is really the goal here.
Yeah, exactly. And on the numbers, actually, just to add a couple of comments here, this is indeed 10 billion is 5% of XRP's outstanding supply. When you compare this to other chains, you're looking at roughly 30% of ETH that's being staked. Now, ETH obviously has many sources of yield. XRP doesn't. This is really sort of the primary source of exposure to yield. So from the perspective, it can be a very exciting proposition. So the timing is always the question, will it hit it from day one? There's momentum. There's a lot of things, I would say, ingredients that you require to build. Money markets, DEXs and other topics that often were required to scale these liquid staking tokens on other chains. But when you look at higher level, this is 5% on benchmark rates of around 30 to 35%. This is absolutely attainable.
I want to ask, because I think you mentioned it, and then we're almost done, gentlemen. Bear with me here. I want to ask Dennis, coming from kind of Goldman and obviously all of the work and all the integrations that you've done with Midas, I think it's really interesting, and I think you kind of alluded to it earlier when you mentioned like the entire point of tokenization is composability, and I don't think that we talk about what's kind of, I think everybody sees kind of these figures that are estimated around tokenized real world assets leading us out towards 2028, 2030, and kind of even beyond. And I won't get super into the weeds with those, but, the numbers widely range, tens of trillions and, less than tens of trillions, whatever it may be. I guess the real question that I have here is, it seems like from these different ecosystems, people understand like the writings on the wall and they kind of know what's coming. I guess from the XRP holder standpoint, can you maybe touch base on the excitement or the opportunity around as more and more assets, real world assets, become tokenized? What's going to potentially be possible to leverage your assets in that regard? Because right now we still don't have a lot of options out there, but it seems like we're going to have a lot of options in the near future.
It's a question near and dear to my heart, and we probably need to extend the interview to cover this to the full scope. But first and foremost, I think tokenization is sort of this term many people talk about it. RWA is almost this opaque term. I actually think it's extremely central to blockchains. It's extremely central. When you think about fundamentally, blockchain is nothing else than a distributed ledger. Where ledgers, databases being used, well, they're used to transfer value in banks, assets, liabilities, brokerages. So those industries that happen to really utilize ledgers in a traditional form are largely of financial nature. And now effectively we need to do the same thing with blockchains. In my view, blockchains are not useful until we find them to be a medium of exchange and a medium for real world usage. Stablecoins were the first innings of this. I mean, now it clearly has product market fit, $200 billion in outstanding circulation, growing much more, expected to grow much more as we see the adoption in the US and the biggest capital markets in the world finally waking up. Now, after you have money is the first thing you need. First, you have a medium of exchange. Then you do the savings products. That's exactly what we're building with MXRP. This is basically a savings product, an interest rate type of product that allows you to passively engage in this. Now, and then after you have the savings products, let's say you have your governance securities or other types of product covered, then you will require, and you might be interested to deploy your funds into stocks, bonds, and other products. This is something we can do with Midas as of today if we wanted to, but we focus much more on these savings products, these tokenized savings products, if you will. This is not the exact term what they are, but it gives you a picture what they resemble to users. So we really focus on this element of taking products that already have adoption in crypto. This is specifically XRP, this is Bitcoin, this is stablecoins. These are very large asset classes, and provide the users and holders of these tokens. We don't try to convince new ones to buy them, but we try to convince those existing holders to participate. And hey, I'm excited about Bitcoin, I'm excited about XRP. I would like to accumulate a little bit more of it. And then we put it available in a tokenized representation. And then the user can decide, okay, I like these couple of percents that I accumulate every year. But if we want to go much more, I can go to DeFi and enhance my returns, enhance my risks, and effectively do much more with it. So we see ourselves as a tokenization player, but this is with a heavy focus on these elements. And indeed, we have this vision that tokenization without utility is useless. If you just have a closed representation of of an existing fund, that in itself may not even add any value, because if you don't have this composability, you might as well stay in a traditional finance space. I can tell you from experience, traditional securitization is likely cheaper in many cases, and really the bandwidth you go here is that the composability and these functionalities we enable here are really core to what we do. Now, the numbers, I believe, really speaks for itself. Now, there are many estimates on what RWA means and how big the volumes are, but we've become the biggest player in the space. $1 billion in TVL and different vaults, different constructs of what we do, and this with a very lean team with no marketing incentives. I can tell you the best is yet to come. We have a couple of big announcements in store, and this is one of them. For sure, this is a very important product for the future.
I think that's a huge achievement, by the way. So congratulations. And I wish you would have corrected me now on the pronunciation earlier. From Midas' standpoint, 1.17 billion is absolutely massive. And to put into context some of the figures that we've seen over the past, I think there was a Treasury report that came out, just a few months ago that estimated, hey, if all things go well from a regulatory clarity standpoint, we may very well see like a $3 trillion stablecoin market cap by like 2030. Which is like wild to think, because right now, as you mentioned, it's right around 200 billion. And I think you also brought up a really interesting point. I think this has kind of been a historic, I guess maybe, I don't want to use the word problem with crypto, but I think potentially a problem with crypto is that there's this kind of mentality of like, hold a digital asset and expect amazing things to happen without doing anything with the digital asset. And I think that that's like, thankfully starting to change. It's not about, and maybe that is still an option for people, and people still will always have whatever option they want to based on whatever their risk tolerance is. But it's not just about holding something, expecting something to happen. It's about what you can do with something to kind of make it happen for yourself. And that's kind of the whole point of, at least in my thought process, crypto. It's like democratized access into all sorts of different things, almost like a playground of opportunity that just doesn't exist in other areas. And it's really exciting. I want to ask, as we ramp down here, Georgios,
very quickly on this topic, $3 trillion in stablecoins also means there need to be a lot of tokenized assets. That effectively is the vision, and we are super excited about what the future has come. But it is a very hard journey, and sorry to interrupt.
No, that's the same thing that I thought about, and I'm like, okay, well, if this Treasury committee that put this report out is correct, and it's like 2.8 trillion by 2028 or whatever, I'm like, what's the market share right now for all of crypto versus stablecoins? What's the ratio? I would expect the ratio of stablecoin market share to maybe go up, obviously, but there's still a ratio. And it's like, I start going in my head, like, where are we going to be at? So anyway.
To tie it back to this opportunity here, there's around $200 billion worth of stablecoins. We have around $1 billion in assets, largely dollar-facing assets. There's around $180 billion of XRP in market cap. Stablecoin XRP is pretty much the same opportunity set, and there's a lot of tokenized assets that need to be available there. In fact, actually, we feel tokenization, transfer of value, internet of value is very, very close to the vision. And obviously, with the stablecoin initiatives coming out from people directly, this is definitely a very important point. So this is really why we feel extremely excited about this, and really thank the entire team and everyone that has invited us to this opportunity to be able to participate here. So this is really an exciting opportunity, and really feels mission critical in our view.
100%, and I think. Georgios, you and I were talking about this a couple of days ago when we were trying to plan this podcast. You see kind of the ultra wealthy people in the world that they don't really care about, cash and things like that. Like, yeah, they certainly do, but they have a bunch of assets and they borrow against them and they do all sorts of things. And, I'm not trying to give advice to anybody out there, but like, I do think that that's going to happen within the digital asset space as well. It's going to come with probably a lot of education, or people are just going to maybe be educated themselves. But anyways, I'm going down the rabbit hole. Let me get a couple more questions with you, gentlemen. So Georgios, I guess, one thing that's interesting to me, and I'm going to broaden this out a little bit, is Axelar has pitched the internet of blockchains. Do you look at something like MXRP as being, an early blueprint for future products from Axelar and maybe some other ecosystems that you guys work with? Do you see that synergy with, what we're talking about today with Midas and the MXRP product, potentially being able to extend out into other products, or just maybe broad thoughts on that?
Absolutely. So Axelar is connected to most of the chains today, and we're looking to create more value on top of the network. We're launching, in addition to MXRP, some other parallel workflows that we're going to be announcing soon. But back to the main point that Dennis was mentioning before, and what you were saying, Ryan, multiple times. You have all these opportunities in the traditional world that only wealthy people can access. And with tokenization, you create these fungible tokens that anyone can access with a click of a button, right? This is a frictionless system. In the traditional world, unless you're really wealthy, right, by the standard of the average person, you will not be able to access these opportunities. On-chain, everyone is equal, right? If you have $1, you will be able to get access to the same opportunities as someone who has $1 billion or $1 million, right? So this is really about democratizing finance, and there shouldn't be any bar to access those opportunities on-chain. The first opportunity is going to be MXRP, taking those strategies that traditionally are only limited to sophisticated actors in the space and bringing this yield on-chain to everyone who is willing to deploy capital. But after XRP, of course, XRP is the biggest target. As Dennis mentioned, you can do the same thing for BTC, for ETH, for a lot of the other ecosystems, right? Ryan, in your community, you mentioned you have Hedera, you have Algo. A lot of this ecosystem don't have big DeFi products that accept their tokens as collateral, right? And the goal is to grow DeFi across all of crypto, take assets that have no utility and bring them value. And then, of course, from there, you can expand to RWAs and all kinds of other assets. But yeah, with Axelar, we are looking at building more products on top of the stack. XRP makes sense, $200 billion market, and there's no yield. There's literally no other place to earn yield. So this will be, MXRP will be the XRP bond, and the goal is to expand and do this for other ecosystems after we clear the blueprint, after this is very successful. And there's undoubtedly going to be a lot of demand once people see how well this does and how much value it brings back to XRP.
I think the last question that I have, and I want to make sure I get it in before I kind of do closing statements here. From a security standpoint, how are you guys tackling security of, I guess, users' funds and things like that? So whenever they go through the process of obviously their native asset like XRP and, bridging it or transferring it into something like MXRP, I'm sure Midas, you guys have a lot of experience with some of the other assets you guys have utilized. And I know Axelar, from your guys' standpoint, kind of natively as being kind of cross-chain and interoperable with different ecosystems, you guys probably deal with this every second of every day. So I guess whichever one of you guys maybe wants to tackle that would be great.
Yeah, so let me take the Axelar side because there's two infrastructure pieces here that make this possible. One is Axelar and the other is Midas. With Axelar, we require this built-in block because XRP needs to be moved to the XRPL EVM, where we have the smart contracts, where Midas will launch. But also, Axelar will be used to distribute MXRP to various other ecosystems. I think BNB, the Binance blockchain, Base, the Coinbase blockchain, Solana, where we are actively working to create additional yield opportunities for MXRP itself. And Axelar itself, it's been running in production for 3.5 years. It's the most decentralized interoperability platform in the space with 75 validators. The closest competitor, Wormhole, I believe, has 19 validators today, so 25% the validator set. So with Axelar from day one, we value decentralization, we value security, no security incidents in 3.5 years. And then, of course, we have the tokenization platform, Midas, and Dennis can talk more about that.
Exactly. So this is a topic that we obsess over on all levels and all fronts. So there's multiple layers of security. First of all, regarding the asset management infrastructure, we only use the best-in-class custodians. So specifically highlight here for DeFi and FI blocks, who some of the leading provider in the space. The asset managers that we partner with have gotten extensive diligence. This is something I've done in my entire prior career. So this is diligence both on the actual authorization procedure, integrity of the people, track record, and everything involved here. And of course, it goes without saying, all smart contracts are extensively audited, only provided with the industry standards. We also never had a security incident. Of course, that doesn't mean we should lean on the fact that it may never happen. We've also conducted extensive OPSEC reviews, so that the entire team, everyone involved in this, is extensively briefed on security measures. Just some of the things I can share publicly.
Yeah, and maybe Ryan, just to add here, and I'm glad Dennis mentioned, talked about risk explicitly, but there is risk with everything, right? So the goal here is not to do something that is zero risk, but to get very strong risk-adjusted returns, while at the same time being transparent with the community about risks. If you look at some of the other options for earning yield in the space, you can go to a centralized exchange. Right? There are some venues that require you to lock your XRP for 90 days. Maybe they return 3%. I'm pretty sure they get more behind the scenes, and then they take a very big commission and only give the users a small part of it. You have no idea what's going on there, how your XRP is used. There are some platforms on the blockchain that also are not transparent, right? So they take your capital, they trade it, but this is really the first time where you're going to have, as a user, full visibility into how your assets are being deployed. At any moment in time, you will be able to go to the transparency page that is going to be set up and see in real time where your funds are being deployed. This is unprecedented, right? In traditional finance, this doesn't exist. Even in crypto, right, for tokenized assets, this is something very new. And yeah, Dennis, I think he wants to add something.
Oh, exactly. I can only echo that. Nothing is ever without risks, and we deeply care and obsess about users being aware of those. So we encourage, of course, everyone to read the relevant risk sections on the website, and we do our absolute best to mitigate those and retain our integrity reputation in the industry. So this is something we take extremely seriously. We spend most of our time and resources on those topics. We don't take it lightly.
Well, I want to give both you gentlemen a chance to any closing statements. Congratulations again on the announcement of the launch. And maybe I'll start with Georgios and then we'll go to Dennis and we'll ramp down here, guys.
We're super excited to grow XRPL DeFi together. I guess maybe one closing statement is that, as Dennis said, MXRP is going to become a perpetual buyer of XRP. Not only as it's a user, you earn yield for holding it and for deploying it into various DeFi protocols. You also contribute back to the ecosystem because the yield is from sources external to XRPL, but it's used back to buy XRP, right? So success for MXRP means success for the wider XRPL ecosystem, but also a positive, a positive signal for the XRP price for the long run. So super excited to work with everyone, and thank you so much, Ryan, for hosting us.
Likewise, I would only add, for us, beyond, of course, supporting the buying pressure, which is quite substantial, 700 million a year, could add something like 10 to 15% to a traditional free float. This is actually quite a substantial commitment. But actually, more meaningful to us than the numbers is really the alignment on the vision. I think Ripple and XRPL were one of the first ones to do this, and I think that what we believe in and how the future finance is looking to shape out, we feel extremely aligned in that regard, and this is why we're doing this and feel extremely excited about this partnership.
Awesome. Well, thank you, both of you gentlemen. I want to make sure that I mention, please, if you guys are watching this, go and give at Genfinity and IO a follow. We interview tons of leading ecosystems in the space. Make sure you guys give Axelar a follow at Axelar, Midas at MidasRWA. You can find Georgios at Yorgos V_. You can find Dennis at D Dinkelmeyer, Axelar.network, and Midas.app. And XRPFI is more than just a new product, as we've heard here today. It's the expansion of XRP into programmable liquidity, cross-chain yield, institutional grade XRPFI. I'll use that term because DeFi was yesterday. XRPFI is today. Georgios, Dennis, thank you guys so much for breaking this down. Again, huge thank you to our ecosystem partners. As always, this is not financial advice, just education and conversation. Bear with me, gentlemen, as I ramp this down and make sure I get our recordings, and thank you both.